High inflation failed to dampen festive spirits during the Navratri as people, especially in cities, went on a shopping spree. The latest CMIE Consumer Pyramids Household Survey shows during September, the index of consumer sentiments rose to a 30-month high. Elaborating on it, Mahesh Vyas, the managing director and CEO of the Center for Monitoring Indian Economy, on Monday said while the consumer sentiments rose by 7.1% in September, the unemployment rate also dropped to a 4-year low of 6.3% during the period. Vyas emphasized that the fall in unemployment rate and the improvement in consumer sentiments was witnessed across both rural and urban regions. While urban consumer sentiments increased 9.3%, rural sentiments rose by 5.6% in September. The respective indices of consumer sentiments were at their highest in 30 months. Although rural India lost some steam in October, its 30-day moving average index of consumer sentiments is at its peak since April 2020. Despite high inflation and high interest rates, the CMIE survey recorded a sharp increase in the propensity of households to buy consumer durables in September across both rural and urban regions. In fact, there are signs of improvement in consumption across segments. The recent Red Seer 2022 e-commerce festive sales report reveals that the online retail market touched $5.7 billion in gross merchandise value, registering about 27% growth from a year earlier during the first week of the festival season from 22nd of September to the 30th. Mobile phones continued to lead the market during this period. The report also found that online shopper base had jumped by 24% over the corresponding period last year. While 65% of the shoppers came from cities other than metros, the spending by each online shopper also increased by 3% during the particular festival week. Auto sales were also buoyed by the festival cheer. The Federation of Automobile Dealers Associations, or FADA, reports that this Navratri, retail vehicle sales were up 57% to almost 540,000 units, from slightly above 340,000 units during the COVID-hit 2021-22. Sales of all categories of automobiles, including two-wheelers, three-wheelers, commercial vehicles and tractors, put up a strong show during the Navratri this year. In a major boost to the automobile sector, not only were overall sales increased by 27% compared to Navratri sales last year, but also 16% above the pre-pandemic 2019 season. The numbers were a clear indication of the fact that after a gap of 3 years, customers are returning to the showrooms in a big way. One of the indicators of a worrisome K-shaped economic recovery has been the recent trend in auto sales, where expensive SUVs have seen brisk sales while two-wheelers found few takers. But this Navratri, even the two-wheeler category, which was showing weakness when compared to pre-COVID months, registered single-digit growth. The current year's two-wheeler sales numbers were 20% higher than 2020 and 4% higher than 2019. In fact, all categories showed positive momentum when compared to the pre-COVID Navratri 2019. FADA estimates this positive trend is likely to continue till Diwali. This indication of a broad-based recovery in consumption will be a welcome trend, since a recent survey conducted by UBS Securities India indicates that affluent consumers were upbeat about spending during the festival season, but those in lower income groups did not share their optimism. A Bank of Baroda report in September shared that the production of daily consumption items, which continued to see elevated price pressures, showed a drop in April-July 2022 and also when compared to pre-pandemic levels. Meanwhile, items like liquor, travel goods, bottled water, aerated drinks, and passenger vehicles, especially in the high-end segment, showed momentum. So, how will the impact of elevated and sticky inflation play out on the purchasing power of certain segments of the population, especially those that have been deeply affected by the COVID-19 pandemic?
So when you're talking in terms of a K-shaped recovery, I think that kind of a trend will continue because there'll be certain sectors which will be doing better, especially in the consumer durable goods segment. In the non-durable, so what we call the FMCG segment, which is what even our study had shown, that we get a different kind of picture where the demand has been a little more lackluster. They're not really picked up because where the price increases have tended to hurt. This kind of K-shaped kind of a recovery is something which we will probably see for the next couple of months.
Citing rising borrowing costs and global risks, the World Bank has cut India's growth forecast for FY23 by a full percentage point to 6.5%. Crude oil prices are on the boil again. even as the Russia-Ukraine war stretches on. At a time when exports can no longer be the engine driving India's economic recovery and the global economy is teetering on the edge of recession, can the country count on its domestic consumption, buoyed by its peak shopping season, to help sustain growth?
Yeah, I think there are definitely indications that the consumption story is back on track. In fact, we had observed that right from the month of April, that is when the financial year began, there was a tendency for consumption to probably grow faster than even investment. And that was something which kept ticking, as reflected mainly by the GST collections, which of course were propped up to a certain extent on account of higher inflation. And right now, what we are seeing is a full recovery in terms of overall demand for both goods and services. And that's what's getting reflected in terms of the higher consumption numbers which we're seeing today. But even if you look at other consumption, general retail consumption, even if you look at consumer goods, we've definitely seen an uptick, something which I think is going to continue. No, in fact, I think whatever growth we're going to get this year is going to be driven more by the consumption factor rather than the investment factor or even exports for that matter. So we could be expecting consumption to remain the main anchor for growth for the rest of the year and also for the entire year. And there will be some kind of support coming from the central government in the form of its capital expenditure.
With the export engine sputtering, promoting domestic consumption has become all the more pertinent. The Reserve Bank of India and the government will have to stay laser focused on controlling inflation, which has the potential to impact the purchasing power of consumers.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.